That's exactly right. So then we have Obama coming in. He's already explained this situation is going to take years to solve. So we understand, first of all, we have a Federal Reserve System, and we don't have time to get into that, but you can find that type of system. It's a debt-based system, and you can spend many hours debating that. You have that system more, and that's what we're dealing with. The problem is we describe what the crisis is, and in other segments we'll explain to you how to preserve your assets. But we're just trying to give you an overview of how serious this thing is. And I think with most people are just walking around oblivious, right. Or they believe in the Kool-Aid or the propaganda. Right. That this thing can this thing really be straightened out?
Well, I doubt very seriously, because I want to go back, because I really omitted, I think, something very important when you asked a question about what really took place on September 15th. When that actually transpired, what had happened, the Treasury Department had been watching the money market accounts. Mm-hmm. And what had taken place there is that there was an unprecedented amount of withdrawals. I think it was to the tune of $550 billion.
That's $500 billion.
That had been withdrawn. And this is what caused the immediacy, if you will, to act on this, because of the fact that they knew that if they didn't cut the water off, something drastically was going to take place.
I'd like to just add to that what you said. And when he said they withdrew $550 billion, they didn't go in and withdraw cash like we as middle class people. Give me $10,000. They counted out at 20. This was done electronically.
Electronic withdrawals.
And so this is done in a click of a mouse. The money's gone.
That's right. That's right. And what Paulson had said to the members of Congress, that they had been watching this, and I think around 11 o'clock or so, they were saying that if, in fact, this would be allowed to continue, all of the money markets, the banks, everything around the world would be completely shut down. And so what they did, and went in, and I think they ejected something like 1.5 trillion dollars or something like that, as I seem to recall. But the bottom line is that they knew that they had to act on doing something. Otherwise, what we were looking at was going to be an absolute failure.
And this money market was basically corporate money. This wasn't individual money.
That's right.
And your hedge funds money that was being zapped out of these banks that they, when these investors and people that had money in various money markets, they wasn't hesitating because they have a fiduciary, meaning they have a clients that they have invested their money for, and now they wasn't waiting. They were just punching a button. The money was just going into other avenues or safer locations. So in essence, the thing was getting ready to shut down, and this initiated the whole thing with the top, the idea of, first of all, I think they guaranteed so much money. They went in and guaranteed the money market funds to ensure some type of confidence. Right. Now, how does faith and confidence play in this financial scheme?
Well, when you say faith and confidence, I think because of the fact that we're already operating a false system.
Right.
And as such, I think we need to be aware, and I think the public need to be aware that that the system that is in place right now, I don't think that people can have any confidence in it whatsoever. Once they get to the actual truth of what's going on, because everything that we're being told just isn't true, because everything, this is going back again, how did we get here? We got here by just not Republicans or Democrats. This has been building up for years, but even more so now, it is accelerated because all of the wheels have come off for what was been going on with the investment houses, with these hedge funds and with these securities and so forth. But not only that, everything around the world now, when we look at what has taken place, I don't think that anyone has any confidence in our system as we look at it. So as a person, when you talk about confidence in a system, I don't think there's any confidence in the system. Oh, and even though they try to give the appearance, because on that same day they went back in and they said, okay, and that's what we'll do, is that we'll guarantee these accounts up to $250,000 to suggest that everything is going to be okay. The government is standing behind it. But I always say this, and I want to sort of digress, is that how can you, again, guarantee something that you really don't have anything to back up with? To me, that's false.
Yeah, I mean, there's no gold.
There's no gold or silver to back it up with. So what are you backing up with? How can you guarantee something that is not there to back it up with?
So what they're doing is printing more money.
They're printing more money
to and placing it into these institutions, which undermines our currency that we already have in our hands.
That's correct. Because in essence, what it will do eventually, it will allow, or it will permit a system where we'll just have hyperinflation. And of course, the money essentially will become worthless because people will not have the capacity to buy anything with dollars that are worthless.
Okay, so
that's where we're headed.
So when we start determining, most people don't understand what hyperinflation is, the impact that it has. In other words, I can have $10,000 in face value, but what you're saying is it has no ability to maintain its purchasing power.
That is correct. That is correct. I mean, because of the fact we know that. Let me give you a strong example here. I've got here on this table here an example here. These are Morgan silver dollars. The first 5 years of Morgan silver dollars. Just give me an example here. If I were to take one of these, well, I can't quite get it out, but if I were to take one of these Morgan silver dollars, okay.
And when you say Morgan silver dollars,
yeah.
when was these things?
1878. Actually, is when they started making these. Okay. But my point here is that if I
these are pure silver.
These are pure silver dollars, 90% silver dollars. Okay. But the point I want to make here is that if I were to take one of these dollars and use it in today's currency system, in other words, take a dollar, Morgan silver dollar.
Its face value is $1.
$1. Okay. And this is what we call a
Federal Reserve note.
Federal Reserve note. Now, it takes, in order to get the picture of what we're saying here, it would take 16, because today I think silver is about $14 in fact.
Yeah, for 14.50.
So we're talking about a ratio of 14 to 1. It would take 14 of these to get one of these. So that gives you the gravity of the picture here. Okay. So as silver continues to move, what happens to silver? Silver does not lose its value. It goes up in value. And it takes more of these. In other words, it will take more of these to be printed in order to get one of these.
Okay, so you're saying that really it's not the silver that's going up, it's the declining value.
It's the declining value
of the Federal Reserve note.
Of the Federal Reserve note.
This is not U.S. Treasury, it's a Federal Reserve note that he's holding in his hand. And to give you a good idea, I was in a store today, and I heard something about good and plenty. Everybody remember the good and plenty box? You know, good and plenty. I could not believe, I just couldn't believe that it was 80 cents. For 80 cents. Now, when I was a little kid, it was a nickel. So you go from a nickel to 80 cents. So what's happening here is like Dr. Mason said, I understand it, but I'm just sitting, I said it to the cashier, but she didn't catch it. In other words, our money is becoming worthless. How can you go something that costs a nickel 35, 50, 40 years ago? Now it costs almost at 5 and 80, that's almost 15 or 20, almost 15 or 16 times. 40 years, so that means our money is becoming totally worthless, folks. We're not maintaining our value or purchasing power.
That's correct. That's correct. And so, yeah, I want to come back to that word confidence. I think eventually what people are going to be, let's put it this way, the masses at large probably do not understand what's going on. However, the people who are in the hierarchy, the people who have money, do understand this, and because of the fact that they're not putting all of their money, if you will, into banks, CDs, and so forth, stocks, and all of that stuff. They're actually buying the physical metals, that is the gold, the silver, and in some cases copper.
So what you're saying then is that there are certain group of people, the scripture says, my people perish because of a lack of knowledge. Because people do not have knowledge, understanding what inflation is. How does it affect their assets or their wages? In other words, inflation is actually stealing their savings.
Stealing their savings.
And then it's a hidden tax, folks. That is undermining your. In other words, you work 8 hours a day or X amount of days for X amount of money, and what's happened? And you pay your taxes, the physical taxes. But when you find out that you go to the store, you find out that everything is going up, but your wages are not keeping pace with the prices that are. So that's what we call theft of your profit, theft of your time or your labor.
Yes. And so, when we look at the whole thing and the whole entire context here, well, we can readily, we can just see that this situation, as far as the fire, as I mentioned, the fire is not going to actually die down. The fire is going to intensify, because as we get more and more into this thing, and we start seeing these banks begin to declare themselves insolvent,